Welcome to the deep dive. Today, we're going to try to crack the code on how prices really move in trading. You submitted some really interesting stuff on auction market theory, and let me tell you, it's got some pretty contrarian ideas, definitely stuff that might flip your trading strategy on its head.
It really is all about, challenging the assumptions we pick up, right? Auction market theory really helps us get a fresh perspective.
Yeah, totally, yeah. So anyone listening who's maybe new to this whole thing, think of it like an auction, an actual auction. Prices, they don't just magically go up because everyone's like, yeah, I'm feeling bullish today.
Right.
They actually have to fall to get buyers interested, and then they rise to attract sellers. It's this constant back and forth, supply and demand.
Exactly.
Yeah.
Exactly. And we've all heard it, right? The trend is your friend. Makes sense. Ride the wave, right? But auction market theory is saying, hold on a second. That's not always the case. Following the crowd, it might actually lead you right into a trap. It's not just about how everyone's feeling. It's about the mechanics of the market, like how it actually works.
Okay, and this is where it gets good. The text you sent over goes into this thing called volume price impact, and it's not as simple as you might think.
Yeah, you're right. It's not just a straight line, up or down. Think of it like, okay, imagine a bunch of people trying to squeeze through a doorway all at once.
Okay,
Right?
yeah.
The more people you try and cram in there at once, the harder it gets. It's like gridlock.
Yeah.
And that's kind of like the square root function at play here.
Oh, wow, okay.
The impact of those orders on the price, it's not a constant thing. It changes as the price moves up or down.
So it's I'm picturing a busy market square, If it's just a couple people buying apples, the price isn't going to change much. But then suddenly a whole swarm of people show up wanting those apples. Prices are going to go through the roof.
Exactly. And on the flip side, if suddenly everyone's trying to dump their apples, well, the bottom's going to fall out.
Yeah.
It's not enough to just see, oh, the price is moving. We got to understand the why, the force, the conviction behind that movement, and that's where understanding volume comes in.
Okay, this is kind of blowing my mind a little bit. So how does this change the way we think about those classic trading sayings? One that always comes to mind, never catch a falling knife. Always seemed a little, overly cautious to me.
It's funny how those sayings stick, isn't it?
Yeah.
And while catching a falling knife can be risky, if you're clinging onto that advice too rigidly, you might miss out on some really good buying opportunities.
Yeah.
It's not about just buying every single dip you see, but it's about understanding when a price move might be, overextended, and that's a chance to buy low.
So sometimes you should catch the knife, but you got to know what to look for so you don't end up, getting cut. Which brings us to another one of those sayings. The trend is your friend, but is it always?
And that right there is where the contrarian thinking comes in. The source you provided. It actually argues that when a trend is super obvious, like everyone and their grandma is piling in, it's probably nearing its end. Think of it like a crowded party. Sometimes the real fun starts when everyone else has left and you can actually move around.
I love that analogy. That's great. So instead of just following the herd, we need to understand the order book, which is basically, it's just the list of buy and sell orders at different prices, and think like a market maker. But what does that even mean?
That's a great question. Okay, so picture the market maker, like the conductor of an orchestra, right?
Okay.
They're not just playing one instrument, they're listening to the entire symphony of orders, and they're trying to keep everything flowing smoothly.
So instead of getting swept up in the music, we want to be able to read the sheet music, understand all the different instruments, and maybe even anticipate what that conductor is going to do next.
Exactly. And that's where things get really, really interesting. Because this text, it drops a total bombshell on us about these trends we're all so focused on.
Okay, I'm on the edge of my seat. Hit me with it.
Okay, you ready for this? It highlights that markets actually spend a whopping 70% of their time ranging that's moving sideways without a clear, sustained trend.
Hold on, 70%. So you're saying that most of the time, the trend is not our friend.
You got it. And this changes everything. It's in these ranging periods, where it seems like things are quiet or uncertain. That understanding the nuances of auction market theory and those order book dynamics we talked about, that's where you can uncover those hidden opportunities.
This is already a lot to process, and I feel like we're just scratching the surface here. We've got auction market theory, the importance of volume, and even this whole idea of thinking like a market maker. But how do we actually put this into practice?
That is the million-dollar question, isn't it? And the good news is it's not about having some crystal ball. It's about having the right tools, the right strategies. But let's maybe save that deep dive for after a quick B.
Yeah. All right, so we're back. Before we took a little pause there,
Yeah.
we were really starting to uncover some of the power behind this auction market theory, right? And how it kind of throws a wrench into some of those classic trading sayings, but it all seems to come back to, understanding the order book, volume, and thinking like a market maker, which sounds amazing in theory, but how do we actually do that?
Well, it's about shifting from reacting to what's happening to anticipating what might happen.
Yeah.
You see, a lot of traders, they're glued to these charts, right? They're looking for those trends. But auction market theory, it's like we're getting a backstage pass. We're trying to understand what's driving those price movements while they're happening.
So instead of chasing after like a runaway train, we're learning how to read the train schedule and maybe even like figure out where the conductor likes to take their coffee breaks, right?
Uh-huh. I like that. That's a great analogy. And that train schedule, you're exactly right. That's the order book. It gives us like a snapshot, a glimpse into the buy and sell orders at all those different price levels. Supply and demand in action.
Okay, so let's say we're looking at this order book, trying to channel our inner market maker here. What am I looking for?
Well, remember those crowded doorways in that market square we were talking about before?
Yeah.
We're basically looking for those choke points, right? Those price levels where there's a ton of buying or selling interest could go either way. And those are going to be your potential support and resistance levels.
Okay, so like high volume at a certain price that could indicate strong support or resistance, like a point where the market's going to have a hard time pushing through.
You got it. And by understanding this, like this push and pull, by seeing where the buyers and sellers are kind of lining up, we can start to guess, anticipate those potential price movements. It's not about seeing the future, but more like recognizing opportunity when it pops up.
Yeah. This is starting to click a little bit more now. But looking at the order book, analyzing volume, thinking like a market maker, it still sounds really complicated. Are there any are there any tools or strategies that can help us wrap our heads around all this?
Totally. There's some awesome platforms out there specifically designed for this kind of analysis. They can visualize the order book, track the volume at different price levels, even identify those support and resistance zones we were talking about. Some even have heat maps or other visuals to represent the order flow. It makes it way easier to see patterns in those little things that are out of place.
So it's like having X-ray vision into the market, seeing beneath the surface, way more exciting than staring at candlestick charts all day.
Sure, for sure. And it's not even just about the tools, it's about shifting your mindset.
Right.
Instead of blindly following those trends, you're thinking for yourself, right?
Yeah.
You're looking at the data, you're coming to your own conclusions. It's really empowering.
Yeah, I can see that. That would be a game changer for sure. But let's be real. This all sounds pretty, high level. Does this only work for the institutional traders? The ones with the fancy algorithms and those supercomputers?
Not at all. While it's true that, the big institutions, they've got a ton of resources at their disposal, the playing field is actually becoming more level. A lot of those tools and platforms, they're available to everyone now, everyday retail traders. Plus, there's a ton of, educational material out there, help you learn the ropes.
So it's not about how much money you have, it's about how you approach the market and what you know, right?
Exactly. And that's what's so cool about trading is like a constant learning process. Even the seasoned pros, they're always adapting, refining their methods, trying to find an edge.
Yeah. I can dig it. This has been incredibly eye-opening. We've gone from barely keeping our heads above water to feeling like we're actually starting to swim with the current here. But we're not quite done yet. Remember that little bombshell we dropped about markets ranging 70% of the time?
Oh, yeah.
Let's break down what that means for traders who are, looking for those opportunities and how this whole auction market theory thing can give us an edge, especially in those seemingly quiet periods.
Let's do it.
Okay, so we've gone through a ton of information from the nuts and bolts of auction market theory to this wild idea of getting inside the mind of a market maker. But let's bring it all back around for our listener. If markets are really hanging out in this range 70% of the time, what's that actually mean for someone who wants to, take all this knowledge and put it into practice?
I think it's about, kind of a perspective shift, right? A lot of people, when they think about trading, they're thinking about those huge trends, riding the wave all the way, to the bank.
Yeah.
But the truth is those trends, they don't last that long. And chasing them, I mean, that's a good way to end up with whiplash.
Yeah, it's like trying to like surf on a lake, right? You might get a couple of ripples, but don't expect to hang 10.
Exactly. It's those in-between times, those ranging periods when it seems like the market's just kind of drifting. That's where those hidden opportunities are, just sitting there in plain sight.
Okay, I'm hooked. So how's auction market theory help us unlock these secret opportunities when the market's doing its sideways thing?
Remember those support and resistance levels?
Yeah.
Those congested areas in the order book? Those are key. In a ranging market, those levels, those are the playing field.
So instead of like trying to predict when the market's going to make a run for it, we're looking for those moments to buy low at support and then sell high at resistance as the price is bouncing between those levels.
Bingo. It's like, think of it like a game of tennis, but you're playing inside a fenced-in court. You know where the boundaries are, and you can use everything we've talked about, the auction market theory, the volume, the order flow. You can use all that to anticipate those volleys back and forth, back and forth.
So it's not about like outrunning the market. It's more like we want to learn how to dance with it, use its own rhythm and moves to our advantage.
I love it. It's definitely more it's a more nuanced approach, that's for sure. It takes patience, you got to have discipline, and you got to be willing to learn the language of the market. Those subtle little cues it gives you.
Well, this has been incredible. We went from feeling like we were totally lost at sea to, feeling like we're starting to catch a wave. So, so for our listener, the person out there who's ready to dive headfirst into this world of auction market theory, embrace the contrarian. What's the most important takeaway? What do they need to remember?
Don't be afraid to question everything. Don't just blindly follow the herd or take those old trading sayings as gospel. Dive into the technical stuff. Learn the order book inside and out. Understand what that volume is really telling you, and start thinking like a market maker.
Think like a market maker. I love it. Be proactive, not reactive, right?
Yeah.
Understand those forces that are like simmering beneath the surface. This deep dive, I know for me, it's definitely sparked a whole new level of curiosity.
Yeah.
And hopefully it's done the same for everyone listening.
Me too. It's amazing how, just looking at things from a different angle can completely transform the way you approach the markets.
Couldn't agree more. Well, on that note, we're going to go ahead and wrap up this deep dive, but keep in mind the learning, it never stops. Keep exploring, asking those questions, and most importantly, keep that contrarian spirit alive. Thanks for joining us, and we'll catch you on the next deep dive.